Hey everyone, today I want to take a look at social media giant called Facebook. The company was founded and run by Mark Zuckerberg since February 2004, and with the recent earnings report, the stock has dropped significantly and is starting to look very interesting, so stay tuned in this video as we take a closer look at the company. First, as a disclaimer, I just want to say I'm not a financial advisor, so please do your own due diligence before investing. Facebook has made many acquisitions over the years, but some more noticeable ones include Instagram, which was acquired in April of 2012 for approximately $1 billion in cash and stock. When Facebook first acquired Instagram in 2012, it had around 30 million active users, and now Instagram currently has around 1 billion monthly active users. In February of 2014, Facebook acquired WhatsApp for 19 billion in cash and stock. WhatsApp had over 450 million users during that time, and now it has over 1.5 billion monthly active users. Also, in March of 2014, Facebook acquired Oculus VR for 2 billion in cash and stock, and the project has never generated much buzz. So far, this investment hasn't paid off yet, but we'll see in the future if it does. With the closing price of 162.53 on September 6 of 2018, it gives Facebook a market cap of 469 billion and a PE ratio of 22.5, which is not high at all, and on top of that, Facebook has no long-term debt. When it comes to digital ad revenue, it's pretty much dominated by two players, Google and Facebook. We can see from the chart that Facebook has taken shares from Google in the past, but going forward, it looks like they have reached an equilibrium. Let's do a simple comparison between them. Google has a market cap of around 819 billion with a PE ratio of 28.6, and Google has around 4 million in long-term debt, which is really nothing for Google. When you look at purely on a digital ad revenue perspective, with the recent drop in Facebook, it's on a discount compared to Google. When we took a look at Facebook's revenue, it has grown massively over the years. It started off at 5 billion in 2012, and now they have grown that to over 40 billion in 2017. The revenue has been growing around 50% year over year. And of course, with the massive increase in revenue, they've been able to grow their EPS at insane rates as well. Let's take a quick look at the chart. The massive drop was due to Facebook's earnings report, where they reported a weaker than expected revenue and disappointing global daily active users. And on top of that, during the conference call, they stated that their revenue growth will be declining by high single digits, and they're anticipating that their total expense growth will exceed the revenue growth in 2019. Not something investors like to hear. And the stock was hit hard because of that and dropped around 20% that day. The market cap plummeted by 119 billion that day and set a record for the largest market cap loss in one day. Facebook's increase in expenditure was somewhat expected since Mark Zuckerberg promised that they would double the number of employees working on cybersecurity and content moderation to 20,000. They already hired 5,000 and are expected to hire another 5,000 by the end of the year. This expense will hit Facebook's margins, but it is necessary to address the concerns users have with Facebook recently. First, it was with the Russians meddling with the US presidential election in 2016, and more recently with the Cambridge Analytica scandal in March of 2018, in which Cambridge Analytica collected data on as much as 87 million Facebook users. We have to note that the scandal wasn't a security breach because Facebook allowed third-party apps access to the users' data that interacted with the app and as well as their friends of that users. But since 2015, Facebook has changed their policy and now prevents developers from accessing the user's friends' data. Now let's get back to Facebook's numbers. The number of active users has been growing quarter over quarter, but the percentage growth it's been growing at has really slowed down during the second quarter, and we can evidently see this in the chart as the growth rates take a nosedive, and we see this trend in both the daily and monthly active users. What's even worse is that the growth in the United States and Canada has slowed down the most. The United States and Canada is the most profitable region for Facebook too. It looks like Facebook had reached market saturation in the US and Canada, but even though the growth of the number of active users has really slowed down in the US and Canada, the revenue growth generated from hasn't taken a nosedive yet. The most recent quarter, we saw a revenue increase around 37% compared to the previous quarter. So even though the user growth has slowed down, Facebook has still been able to grow the revenue per user. When we take a look at the percentage growth rate in Europe, it has been decreasing slowly, which is expected as the user base increases. But what's interesting is the actual number of users has been up around 20 million per year, year over year. And we can see this clearly in the chart as the change in user base has been very consistent year over year. When it comes to revenue from Europe, Facebook has still been able to grow the revenue in Europe significantly because the user base is still growing by around 20 million year over year. And on top of that, they've been able to generate more revenue per user as well, and that growth is still going strong. But of course, the revenue generated per user from Europe is only around a third of the users from the US and Canada, but is closing in on that gap as Facebook is able to grow Europe faster than they can in US and Canada. When we take a look at the growth rate in Asia, it's been growing nicely at around 20% year over year, but unfortunately Asia doesn't bring in a significant revenue per user compared to the US and Canada. Don't get me wrong though, Facebook has been able to really grow the revenue from Asia by around 50% year over year, but most of that growth comes from the increase in user base, as Facebook hasn't been able to really successfully monetize from the users from Asia yet. And we can see this in the average revenue generated per user. Yes, it's growing around 20% year over year, but that growth rate is pretty low when compared to US, Canada, Europe, which is growing much more. And when we take a look at the rest of the world, it's been increasing consistently by around 15% year over year, except for the two most recent quarters in 2018 where the growth rate drops off as well. So overall, the growth rate there isn't as impressive as Asia and already starts showing signs of slowing down. And the amount of revenue they generate is much lower than the users from Asia. But the revenue growth is growing at around 50% year over year, which is really nice, but the overall amount of revenue generated per user is very low, even lower than the users from Asia, but it's growing its average revenue per user faster than Asia at around 30% year over year. But again, when compared to US, Canada, and Europe, it's not very impressive. So in summary, the user base in US and Canada has really plateaued, but Facebook is still able to grow its average revenue per user up nicely. In Europe, Facebook is still able to consistently and slowly grow up its user base there, while also still significantly grow the average revenue per user, so this can generate a significant amount of revenue in the future. In Asia, Facebook is still growing its user base there rapidly, but the amount of revenue generated per user is very low and isn't growing very quickly there either. And for the rest of the world, the growth in the user base has really started to slow down in the recent 2 quarters, and the average revenue generated per user is very low and isn't growing very rapidly there either. So in the future, we'll see if Facebook is able to really grow its average revenue per user in Asia and the rest of the world like they did in the US and Canada. Now let's take a look at another platform that Facebook owns, Instagram. Even though Facebook's growth is slowing down, Instagram is still growing very rapidly, and we can see this clearly in the chart. And on top of that, Facebook hasn't really been monetizing Instagram as much as they have on Facebook, so it has the potential to generate even more revenue when they dial that up. And recently, Facebook announced that Instagram is working on a standalone app for shopping, a step towards e-commerce. There isn't a lot of details on this yet, since it was just announced a couple of days ago, but there are a lot of businesses who already use Instagram, and they can roll out more tools for merchants to use, such as allowing users to browse and purchase goods from the merchant. But overall, I see a bright future for Instagram going forward, and we'll see just how much Facebook is able to monetize Instagram. Another platform that Facebook owns is WhatsApp, and the active user base there has been growing very consistently and isn't showing any signs of slowing down yet. And recently, Facebook announced that they are starting to monetize WhatsApp and will be charging businesses for sending messages to their consumers. They are planning on charging anywhere from about half a cent to 9 cents per message, depending on the country, and we'll see in the future how this plays out for WhatsApp. Facebook also launched Facebook Watch globally recently as well, and currently has around 50 million users in the US who watch at least a minute of video each month, and the total video watch time has increased 14 times since the beginning of the year. And again, we'll see if Facebook Watch is able to gain any traction going forward. Going forward, why am I bullish on Facebook? In 2017, something significant happened. That was the year when digital ad spending surpassed TV ad spending. Digital ad spending reached $209 billion worldwide, which was 41% of the market, where TV ad spending was $178 billion, which was around 35% of the market. But keep in mind, TV ad spending hasn't dropped off, it just plateaued. Digital ad spending has been growing year over year, and by 2020, Magnite expects digital ads to make up 50% of the market. And with Facebook's dominant position in social media, I believe Facebook will continue to benefit from the increase in digital ad spending. Let me know in the comment section below if you're bullish or not on Facebook, and as always, if you enjoyed the video, please hit the like button. It really helps out the channel, and if you haven't subscribed yet, please make sure to smash the subscribe button, and thank you for watching. I'll see you guys in the next video.